Hello and welcome to another episode of the SwingTrader Status Update. We're coming to you live on a different Tuesday. We've got vacations and other videos that are going on next week. So we wanted to make sure we did our monthly update. We're just, instead of the second Tuesday, this time we're doing it the first Tuesday. We've got a short week this week, a half day on Thursday, July 3rd, and the 4th of July holiday on Friday. So a lot going on. And we just finished the first half of the year. And man, the second half of the year started with a doozy. So to help me walk through it, it's Mike Webster, of course, who is our senior market strategist and one of the huge influences on SwingTrader, of course, with all the ideas and watch lists and everything like that he's coming up with. You can also see him on IBD Live as a panelist, and also his Friday SMT videos where he joins Allie. And then don't forget also the Webby Rambles On that he's also doing over the weekend. So how you doing, Mike?
Dude, watch out for that first step. It's a doozy.
Right, exactly. So let's get right into it. I'm going to share my screen and we'll talk a little bit about the Nasdaq. And man, the Nasdaq kind of started off a little weak, and then there was a little bit of a whoosh, I felt like. And I'm also just going to show real quickly FFTY, because this is a little bit closer to what my account felt like as growth was taking a big hit. So talk to us a little bit about what was going on in the Nasdaq today.
Yeah, well, we should have done the show yesterday.
Yes, right, exactly.
Look, the reality is at the beginning of months, things are, you can see more rotation at the, end and beginning of quarters, really kind of the beginning of quarters, you can see rotation. But the end, at half years and at the end of the year, they can get tricky just because you can't really see it coming. All of a sudden some big funds decide to reduce their growth exposure and move into the other stuff, and they do it very quickly. At least that's my interpretation of what happened today, because it didn't really seem to make sense as far as hard as a lot of things were getting hit, other than just a major rotation. And that happens in bull markets all the time, but it's never easy. And I've never really figured out a way of figuring it out beforehand. And I don't know that anyone else has either, frankly. And so what you have to do is just deal with it when it's happening. So we had that rotation today. So you have to adjust, and how much you adjust just depends on, a lot of things. It depends on your style. It depends on where you are for the year, what you're holding at the time. And, if you've got a lot of high octane names, then you got to, be more aggressive with the selling. If you're more, we were for the most part, like middle of the road, not super high octane, but also not, super slow and pokey things either. So we did have to adjust. If we would have been, and had to do a lot of selling today, just because many times when you get one day down, that's your first of several. That's kind of your base case. Is I always think of it's like kind of a 2.5 day standard pullback. Like you get the bad hit the first day. It's nice that we bounce off the lows a bit, but it's still not convincing enough to think that we wouldn't go down some more tomorrow. And then the following day, is when lots of times you'll open up weak and then it'll firm up and move up. So 2.5 days of pain is kind of how I always think of it when you start selling off. And then you want to get
kind of your base case, right?
That's my base case. Sometimes it can get a lot worse. Sometimes it doesn't even, it's a one day wonder and you go straight up. And those are the ones we'd like. We'd like that to happen because we still are very, deep in the market, but just not as deep as we were coming into today, because everything was looking really good. And then we got this big reaction. I think it's best to look at the SPY for a second.
Mm-hmm.
And I do have a position in SPY. And you look at this as kind of like a nothing burger of a day of just flat versus what we saw with. Now look at FFTY that you had pulled up earlier. This is really the growth space, like kind of our space. And this is what we saw, like a 2.86. I think, most people who trade our style were probably, unless you had some ones that were really working for you, probably somewhere in this camp, plus or minus, depending on how deep you were. But if you were trading others, like other styles are really like kind of more things that were kind of out of favor. Let's pull up RSP, and this is where you're just an equal weight version of SPY. And this is why we didn't do like massive amounts of selling today, because the broader market, and this is how I like to look at the health of the market, was fine, and I after the close, I played through all the full S&P 500 stocks, something I always do on days where you got a lot of movement, and I would suggest people do that. I like sorting it from what was down the most, and I just went through each stock on a daily and a weekly basis to get a feel for where the money was flowing. And besides the bank space, with I think it was KBE that was up a bunch. Can you pull that one up?
So
So
KBE was up 2.89, and then we've also been looking at that KBWB. That was up 1.59. That tends to be a little bit more concentrated as opposed to KBE, which is spread out a lot more.
yeah, so good point. So that's where I was seeing a lot of the stock movement, but most of the stocks that were the money was flowing into, with the exception of some travel stocks like uh, the Vegas and Macau, names like the Las Vegas and Wynn
Las
and
Vegas
things like that
Sands,
were
Wynn.
having huge,
Yeah.
those were having huge moves on some news. The other place the money was flowing was into the home builders. Pull up the ITB. Um, that was a really big move, up 4%. Doesn't look like much. Now, this is not in a position where we would buy it. Like, let's pull up NVR, which is one of the home builders that I like to look at. And that's a really big move, up 3.8% when growth is down, close to 3%. So that's the type of day we had. And now our goal is going forward to see, is this a one-day wonder, or is it a trend that is changing, and to me, it's still, my base case is that it's a few day movement of rotation, but we can't ever predict. We can just observe. And charts really weren't broken today. A lot of growth stocks got bruised, but not, I'm not seeing a lot of broken charts, just things where you had to take some action, and a lot of things were up to a point where it made sense for them to come in, but they could have kept going for weeks before they came in.
Yeah.
So if
One
you
of the
didn't,
things I was talking about
oh,
with Ali on the S&T video today was, yeah, a lot of people could look at this and say, well, gosh, the NASDAQ was up 6 days in a row. What do you expect? It's got to come in at some point. And we were also talking about it being extended more than 8% from the 50-day moving average line, which is an area that sometimes, the market will have pullbacks at. But to your point, a lot of times, when you're at the beginning of a move, you do get that kind of extension and it just keeps going. So you don't necessarily want to immediately throw in the towel that early, because then it's harder to get back in.
yeah, absolutely. Like, you and I have studied, all the market day by day. We spent years doing that when we were doing the market school rules, and just going through it. And it is wild if you go through historically the markets that never pull back in. And so playing that game of you're up 4 days or up 5 days or 6 days or whatever, and just selling into it just for that, that's just not, if you look historically, that just doesn't make sense. Reducing, that's fine, or rotating, out of extended names into things that are in position, that makes sense. But just doing massive selling just because you're up 5 or 6 days in a row, you're going to be left out of a lot of the most powerful bull runs, throughout history. So that's not really how we like to play. So what do we do now? We're in this where we have, one hit, but it's a weird week with Friday being closed just in the US, Thursday just being a short day just in the US. The rest of the world is going to keep on spinning, and they're going to keep on trading during that time. So next Monday, we're going to be playing catch up. So a lot of that is really kind of either we get lucky or unlucky with when we play catch up to the foreign markets, because, we've got to remember that everyone kind of thinks just the US, but the markets are all global. I mean, there's a lot going on in Europe and in Asia that will continue going on late Thursday and on Friday. And we will just kind of, we're just paused, we're in a timeout, and they are just going to keep on moving. And then we will catch up to them, because a lot of our stocks trade over there, especially in Europe, are just dually listed. So it does bring on extra risk. Um, but the fact that the RSP didn't sell off today, and not only didn't sell off, ripped up, and we did end up putting that on Swing Trader, and I did buy a position myself after
You
our
said
restricted,
RSP?
the RSP.
Yeah.
You
And,
know,
and I'll be honest, I mean, I look at this and it almost looks like I thought that maybe I had the change date, feature on. It looks like a completely different day than what we experienced, but the advancers over decliners on the NYSE, 3-1
yeah.
advancers over decliners. On the NASDAQ exchange, 6-5 in favor of advancers. So again, what we were experiencing maybe in our accounts was not necessarily indicative of what the entire market was experiencing. But I also want to just point out that there were, if you look at some of the areas of strength, XLP, which is the staples, I mean, that did have a strong day. You also had XLV healthcare that had a strong day.
And
Materials,
XRT was up big.
XRT. Yeah. Well,
Yeah.
actually, XRT, what's interesting is XLY, which has a very heavy weight in Amazon and Tesla, that, that was still up. But if you look at RSPD, which is the consumer discretionary equal weighted, that
Oh, that's
was
massive.
kind of the big gainer. That was 2.6%. So
Yeah, probably
um
because Tesla was weighing that one down with the
mhm.
the market cap weighted. Because even though Amazon, which I have a small
Yeah,
position
I have a
in,
position in Amazon too.
yeah,
I mean, it
and we
was
have it
nothing.
on
It was
Swing
up
Trader, you
half a
know.
percent. Yeah. So
Yeah, I mean,
mhm.
and this is one of the ones that we've gone on, and this looks right, but it's not. This isn't heat, and we put that on. What did we put it on 4 trading days ago, and just to have some sort of balance. So on a day like, if we were in a day like today, that we had some sort of balance. It wasn't, we didn't want to have all full high octane names on there. So we've been very careful with our ATRs of which stocks we're picking, and we've been going, frankly, heavier with um, ETFs than we have with individual stocks, because for the last, I would say, month, maybe 4 or 5 weeks, the our style of swing trading has just been out of favor, meaning buying strength with tight stops. That just has not been working, and so we've just been getting chopped up a bit. And so when that happens, you look to see what is working. Are you better off going in cash, or if the market's healthy, then moving more into market related things. So we were in, the TQQ in a big way, and in SMH, and of course those had, bad days today. But that's where we were focusing in on, and that test of the 21-day was key. At the lows of that day, we could have broken wide open, so we did have to take some, exposure off there, because if we didn't, and then it got really bad, we would have been selling into some serious weakness, and we didn't want to do that. So we were taking action, but we didn't want to overreact. But then when we firmed up there, that's where we hit the gas hard. And frankly, it was pretty much the ETFs that were helping out the most, more so
Yeah.
than the stocks. So even though our equity curve was back above our moving averages, that allowed us to go to full positions for individual stocks. That's our rule. If we're underneath our 10-day equity curve, we go to half positions for individual stocks. We were back above it, but we still decided, just because we weren't connecting, we're always paying attention to the feedback of what's really happening, not what we want to have happen. So we kept those positions at halves for starting. We did make some of them full later on, but really, that's I think the key takeaway is listen to the feedback the market's giving you. When you're doing really well, everything's connecting, you're pushing it harder. When things aren't working for you for whatever reason, you're backing away there and trying to, put your chips where they are working. And that's just what we've been trying to do, to just try to make as much progress as we can. But I'll just say the last month and a month or so, maybe month and a week, has just been, frustrating. That's
Well, and it
okay.
does make
It
sense. I mean,
happens.
you look at these time periods, you had this sideways action at the latter half of May, and then you had this sideways action. And let's be honest, swing trading does not do well in sideways.
Yeah.
It's if you have cushion and you've got a position in something, you can kind of weather the storm. You can use the 21-day moving average line, but if you're keeping your losses tight, sideways action just kills you, especially some of these pullbacks that we saw that were fairly dramatic. So again, that's just the nature of the beast. And some people think swing trading is more risky because you're doing more trades, but it's actually you're keeping your losses so small. Your risk sometimes is actually underperforming because you're not invested enough, because you're getting shaken out of things, and sometimes it can be harder to get back in. So, but yeah, definitely we don't tend to take big drawdowns. But yeah, let's actually go into some of the charts, unless you had
Sure.
something else on here. I wanted to switch over to kind of some of our performance charts to take a look at those. So let me. I always lose this when I try and go full screen on the chart. I need to move it somewhere else here.
Never go
Uh,
full screen.
yeah, there we go. Full screen, and now I can share it. I think.
Yes, it was.
So here we have the year to date, and again, you can see that the main thing here is that because we really didn't take a big drawdown at all as the market came in, and February 19th top to the April lows, we really were in a position to get a lot of outperformance versus the S&P 500. Of course, when things were as ugly as they were down here, we knew that I wasn't going to get better than that in terms of our overall performance. Oh, you know what? That's what you were saying, slideshow. Okay, there we go. So yeah, it was pretty much as good as it can get when we were looking at all of this outperformance when they were at the lows. But we got ramped up pretty quickly and on margin because we had those chips to play. But then, as you mentioned, once we hit kind of the mid of May, it was a little tough going. But on that 21-day moving average line bounce, we hit the gas pretty hard. You can kind of see that right there, and got a lot of gains. Equity curve right back above that 10-day moving average line, but a hard hit today. Whereas the S&P 500 was pretty much down slightly. We took a much harder hit on the S&P 500.
Yeah, and
But
so it was nice that yesterday we were at new highs for the year.
yeah,
And we could have been pushing it harder than we were. We were pretty deep in on margin, but how it's not just being on margin that is telling you how much risk you're taking. It's really what you're using to get to that margin. And we were doing it, in a really mellow way, which this ATR is a great. Well, why don't you tell everyone, if they haven't seen this chart, what they're looking at?
okay, so this is kind of looking at a snapshot of 50 days. So we're zoomed in a little bit, and you can see that we did underperform in the last 50 days. But I just want to remember, we've got a lot of outperformance for the year. So it's okay that you don't outperform every single day, every single month. You have to kind of know when to go hard, and that's what we were doing right here. But you notice that as our ATR was up here at the five, almost the five level. And we did a podcast on this not too long ago where Mike came on the podcast, talked about how you basically just multiply the ATR of your stock by the weight in your portfolio. You add all of those up, and that gives you your portfolio ATR. Of course, when you're in cash, like you could see, we raised a lot of cash here in May and at the beginning of June. That cash is going to have a zero ATR. And so it's going to have a dampening effect on your overall portfolio ATR. But right now, look, when we're up at five, I mean, that's on the heavier side, between 4 and 5. 3 is pretty normal, I would say, for most stocks. Right now, we're on the lower side in terms of our ATR.
Even though we ended the day at looks like 86% invested, coming down from being on margin in like the 120, 130 range. That, but again, we're doing this, and the only thing we added today from memory was the RSP,
We did
and that
add a little bit to the Broadcom position, but then
Oh,
we
that's
took that
right.
off. Yeah.
Before we took it, yeah. So the RSP has got a tiny ATR. It's just shy of 1%. So that's as low as it gets, and that's why we were reaching. The other reason why we were going there, frankly, if there was a double or a triple of RSP, we would have gone with that.
Yeah,
If it
absolutely.
was available, which
For all you
allows us.
ETF providers out there, there's an idea for your next product.
Yeah, and in fact, if they are listening, please do an equal weight of the top 1,000 or top 1,500 stocks, and I'll be all over that and do it as a 3x. But anyways, maybe they're listening, but that would be a perfect instrument to use. So with this, we don't want our ATR to go too low unless we want to get defensive. So this is about as low as we want to get, maybe a little bit lower if tomorrow is a really, really bad day. But you're always looking at not when you're in a power trend and things are doing well, you in the market, you don't want to get too light unless you see some really clear signs and really major warning signs. And I don't see that yet. Now we'll see what the rest of the week brings us, but it's really about next week because this week being that holiday thing in the summer, you better believe a lot of the big PMs are off on vacation. Like if you're looking at your calendar at the beginning of the year and you see that there's a half day on Thursday and 4th of July, and you're a big fund manager, you're like, hey, you're giving it to the juniors to say, hey, you run the portfolio this week and I'm off on my yacht somewhere, and that's I think
And even that, it's probably not like, oh, I want you to make a lot of decisions. It's like, I just want you to watch it and, you know,
yeah,
don't do anything unless you need to.
yeah, don't break it,
Yeah,
type
don't
of
break it.
thing. And so then it's just weird action. So you've got to kind of just take everything this week with a grain of salt, so to speak. So let's go to the next chart that we've got, or I'll talk for a million
Yeah,
years.
so I wanted to show this is our relative strength line, and again, this is back to the year view. So of course, again, our relative strength was at its peak when we were, in cash, and the market was coming down so much. And while we have come off that peak, we did still outperform for April. We still outperformed for May. We just missed June, but we did outperform for the quarter. And part of that just has to do with kind of sometimes where the calendar ended. It was
Yeah.
in our favor for April and for May, and for the quarter, frankly. Because if we had added today, that would have been a very different look for the quarter, I think. But
Yeah, I think
uh,
we outperformed every month except for June,
except for June, yeah, so far
and
this
I
year.
guess that's why I'm more, we're being more conservative right now because, if you're underperforming, even though in the short term, intermediate term, for the year, doing great. But for the very short term, that's how drawdown starts. So you want to start adjusting before things get really bad. And I don't like how our RS line is looking right now, and so I want that turned back up above its moving averages. And when that happens, we'll be putting the gas harder down. So it's a real balancing act because you've got the market doing so well. You're in a power trend, so you need to be looking at that and aware that okay, you need to be aggressive in the market, especially with that great test of the of the 21 day that we had. But then you're also looking at the feedback of how you are doing, and how we're doing versus ourselves was fine because we were back up at new highs and above our moving averages. But why we weren't pushing it super hard was this chart. So you're
Mhm.
getting that feedback saying, okay, this RS, and everyone should build these themselves. Take the time to dump your data into Excel and do this. Take go onto YouTube and figure it out. If you're not really good with Excel, thank God I've got Justin to do all this stuff because I wouldn't know how to
At
do
some
it.
point, I am going to do a video. So here's the homework for everyone. What you need to start with is basically just your equity, right? And I should note the one caveat here is this works real easily if your equity is something that you don't make withdrawals and
Addition.
deposits to.
Yeah.
Because when you make withdrawals and deposits, then you have to make adjustments. And usually, what I'll do is I'll index things so that I can, make those adjustments and kind of keep everything on equal footing. Because the last thing you want to do is say, oh, I added whatever 8,000 to my Roth IRA for my yearly contribution, and I didn't account for that, and so it made it look like my performance was much better than it was. So,
Or the opposite.
or the opposite,
Like,
yeah.
or the opposite. And I
You're
think
in
that
retirement
happens.
and you're taking money out, and yeah, it's like, oh my gosh, what happened? And it's like, oh, you just took money out. So
Yeah. So everyone should do this because,
I just don't take
again,
money out, so that's why I forget about that side of things.
yeah. So there is the feedback of the market, right? Of what the market is doing, and to keep it simple, just is it above the 21 day or not? On the simplest level, and it's above it. We're in a power trend, so that's special. How you're doing for the year? Well, we're killing the S&P for the year, so then you're getting that feedback from that time frame. But then for a short term, how are you doing? Well, we read new highs yesterday for the year, so that's fine. But it's the relative to your benchmark, whatever your benchmark is. And for us, we pick SPY because that's kind of makes sense. And I just don't like this chart, so we got to turn it around. Until it turns around, we're not going to be gunning it super hard. And when you notice that we're gunning it hard, that's because of this. So we might, increase our RSP, and get exposure that way because it's working that way. We might do some more sector ETFs to have a lower ATR. So just food for thought for you. Now, if you're just killing it in the market, then keep pushing it. You keep pushing it until you start breaking through your 10-day moving average of your equity curve, or your RS line starts going through its moving averages. Then you want to react and
Yeah.
back away. And that's why we show these every week, because you're not always going to be, straight up, and you're not always going to be straight down, and you just need to know how to adjust accordingly.
Not every week, every month.
Or
So.
every month. Yeah.
Yeah.
Forgot
And
that.
as a reminder, I mean, again, we do these updates monthly, but of course, to see the day to day and minute by minute action that we do on SwingTrader, that's where you can go to investors.com and click on the SwingTrader tab to maybe join us on the product, give it a trial for a little while and see what you think of it. Certainly, we have had some changes from a year ago to kind of slow down things a little bit for folks, to make it a little bit easier for those that have a
I was
job.
getting death threats. They said if I get 40 alerts in a day, they're going to come find me. So I'm like,
Come
okay, I
after you.
better do something about that. So we dialed it. We dialed it back as much as we can dial it back. We might have dialed it back too much, but we're trying to make this something that folks can
Can
follow.
follow. And again, we're getting outperformance for the year. And actually, yeah, it's been not just this year. It really kind of started over the summer of last year. So a good solid year of outperformance versus the S&P 500, and I believe the Nasdaq as well. I have to look at the numbers because Tim was mentioning he'd kind of like to see those comparisons versus the Nasdaq. We do use the S&P 500 since that is kind of the industry standard. But I'm looking at the numbers right now, and for the year to date, we've got 13.46 for SwingTrader, and the Nasdaq is up 4.62. It's actually, the Nasdaq isn't even as high as the S&P 500 year to date for 2025. And it looks like we did outperform the Nasdaq every month except for May and June. So we did outperform the S&P 500 in May, but we did not outperform the Nasdaq in May. So, okay, let's take a look at this sector weights chart. This is kind of where we're at, as you mentioned, very heavy on the ETF side, And when we say ETF, I'm actually talking there more about the market ETFs. We also have a position in SMH. That's a full position, so that means 10% is our full position. And I put that in the chips because while it is an ETF, it's really okay. This is a bet on chips. So this doesn't even reflect how heavy we truly are in ETFs. In software, we've got a 10% in CIBR, which is the software security. So that's in software here. So there's a much higher.
We're roughly, I think, 45%. We're 86% invested,
87, yeah, 87 if you round up.
and about 40. I think about 45% of that is in ETFs.
46, yeah.
Yeah, who's counting?
Yeah. So any comments on kind of the spread here?
No, I mean, if anything, until it starts clicking the way we want, probably it's going to be more of the sector ETFs because, and I think folks should think about that for their own trading too. Like when you're, I look at that as a source of funds. You put it there of the ones that are working, and then when you see stocks and um, then when you're fully invested to whatever level that is for you, whatever your line is, let's say you don't want to go on margin. If you're fully invested and you've got a bunch of ETFs, you just use those as a source of funds. You start selling those off to use that capital for your individual stocks. That's how I've been trading for a couple decades, and I really like that that way of managing risk because it still keeps you in the game rather than saying, okay, uh, my stocks aren't working out. So then you've got this massive cash position, and then you're not participating on the upside if the market goes that way or the ETFs go that way.
Okay. Well, you know what? Let's round this discussion out just to
Sure.
talk about a few stocks. We already talked about the RSP, so we can check that off of our list. But let's also talk about Goldman Sachs. I still have a position in this myself, but we took it off on SwingTrader, and it's like, well, gosh, it looks great. You know, getting above 700. This really has to do with taking some profits into strength, right?
Exactly. So there's different types of gaps, right? You have your breakaway gap when that's coming out of some sort of consolidation or base. And then you have your exhaustion gap, and that's after it's been running for a while. So yesterday, this had like a mini exhaustion gap. You had already had a few gaps or another gap in there, earlier on. And at that point, and it was right around that 700, and I wanted to take it off there rather than letting it come in and doodle around. I didn't think it was doing anything wrong. It was just exactly what you said. You can't always sell everything into when you're swing trading, you can't always sell everything defensively. Now, position trading, you frankly can if you want to. You can wait and do there is a style of position trading where you're not really doing much offensive. You're just doing defensive. Nothing wrong with that. But with swing trading, you want to make sure that you're blending the offensive in there. And that was a hard sell because I think Goldman looks good. I think that the area looks good. It was just getting stretched. And some of my indicators that I use, like the Webby RSI stuff, was telling me, you know what, it was a time to lock some in. I wanted to bring it down to a quarter, but again, to try to, it was a half position, but we're trying to not have this be so hard to follow. And along those lines, I did want to bring up, we were getting some calls to customer service about folks who trade, follow SwingTrader with their cash accounts, like let's say a non-margin retirement account, and how to do that when we go out on margin. Well, one of the things you can do is, one, you don't have to follow every trade to the penny, but if you're trying to do that, you can just dial those positions back. So if we're putting on a 5% position, you can figure out the math and just do like a 4 and change or a 3% and change of those. Or if we put an ETF on, let's say we put a SPY on, instead of eating up all that buying power, you can go with a double or a triple and just position it accordingly. So if we put a 10% SPY on, you can do a 3.3% UPRO and have the same impact, but then now you've got a bunch of cash still in your account. So It's totally doable. A lot of the accounts that I run are cash accounts, and that's what I end up doing there. I use the triples in those accounts, and I use the singles in my margin accounts. And you don't have to follow it every single thing. It's just some people like to do that. I would look at this as an education of just asking yourself, okay, the guys just took Goldman off. Why did they take it off? And do you want to sell it? Like what Justin was saying, he didn't sell his. He just kept his, and there's nothing wrong with that because we're looking at this as the overall portfolio and saying that what we're not making the progress we wanted. We've got this one. We want to lock this one in so we can move that money to something else, or have just locked it in and then keep that buying uh, power available. So, do you have anything to add to that?
Well, whereas you have a number of cash accounts that you're managing in addition to your margin ones, I am pretty much exclusively cash accounts. I use most of the trading that I'm doing is in retirement accounts, and so by nature they have to be cash accounts. So yeah, I don't find a problem with that. It's one of those things where you make adjustments. I think sometimes it's a little bit hard to say, oh, okay, well, I'm going to adjust everything down because you never know when we're going to go on margin and how deep. So for me, that just means sometimes I have to make some decisions. Oh, here's an idea that came up on SwingTrader, and I can't play that one because I ran out of buying power. If I do want to play it, then that means I have to decide, okay, which stock is going to leave, or do I trim something down, trim a few things down in order to make room? So you make adjustments, and that's just we can't cater this to any one individual. That's not what we're doing. We're not an investment advisory firm. We're doing a general thing, and so it's not necessarily going to work for everybody. But as you said, it's supposed to be educational, give people ideas, and also give them a sense of how you might run your portfolio and make some of those decisions. And that's what we're really trying to do with our commentary and with these videos, of course. Let's also take a look at RKK. This is one that I still have I think I have a small position in this. I think I did most, I sold most of this, but I might have kept a little bit.
I might have a sliver somewhere. I don't
Right.
think I do, but just when you said it that way, I'm like,
Yeah,
maybe I
I
have a
know, right?
little,
Exactly.
if it, maybe a 2% and something, but I don't think I do. But yeah, we took this off, what, 2 days ago, I think?
Yeah, right. On this down day right here.
Yeah. So with that one, that was also a hard sell, So it broke out of that cup with handle. It ran up 20%, a little bit more than, 20%. And so it was a natural place for it to pause and go sideways, and was getting a little bit stretched. And we wanted to go ahead and lock that in then, rather than being forced to do it. If we didn't do it then, we would have been doing it today. And we've just both been around the block long enough to know that, also why we sold the Goldman. Like Goldman held up today, because that whole area was doing well, but it was one of the few areas, that we had been playing that held up nicely, and it could have come down a bunch, and then you're selling it into the weakness. So you want to try to lock some things in when they're up there. And of course, sometimes, this could have gone up 2% from where we sold it, or 4% or 5%. And then you're just looking for ways to get back in. I want to get back into ARC when it makes sense. If it comes into the 21 day, has an upside reversal, most likely we'll be given a shot there. If it goes sideways for a week or so and gives us an entry, we'll be going there. I don't think it's done. There are some problems with some of the key stocks there. That's why we're just backing away from it. And that's the nature of swing trading. So when you take something off, it's not saying that you think this thing is going to tank. It's just you either want that cash, or you want to put it in something else that has more upside potential in your mind.
Exactly. And then let's just go ahead and we'll wrap things up here. And as our last stock, we'll put in Twilio, another one. I think we took a small loss on this, and this is just kind of a reminder that it's better to take some small losses on things rather than big losses, and let them get away from you. So we had this on on SwingTrader. We took it off today because it just, we had a full position in it. We had actually, this was one of the few ones that we had raised. We started the position on the 16th. Is that right?
It seems like it would have been that upside reversal, but
Yeah, so we started it right here on the 16th.
oh, really? Huh.
That seems strange that we would have
Yeah, I don't think
lasted
so.
that long. But yeah, and then added to it there, and yeah, we
Well, I
didn't want
guess
to let
so.
our
I don't know. I mean, probably if that's what your numbers say, it's so um, look, with this one, I really thought it was going to 150. I really did. I had it in my own account too, but with the selling that was happening today, I had to sell it in my own. And this one looks like it wants to test the 50. And so we sold this pretty early on before it got bad from memory. And it's been a long day. But that's not the type of action that you want to see when you have one bar that's taking out several days worth of trading. Typically means that the selling isn't done. And so with swing trading approach, you'd want to back away from that. Now, if you're position trading this, you could have given it down to, that upside reversal low to see if that was going to hold, but that's not what this product is, nor how I chose to trade it. Just because it looks, I don't like breakout failures sitting with them. I'd rather just buy them back. If it takes back out today's high, it might be something that we, consider buying back. And that's the thing that people, if you're new to swing trading, you've got to get comfortable with, of buying something, either locking in a small gain or a small loss, and then moving back into that again a couple days later, a couple weeks later, a couple months later, and just forgetting, you've got to compartmentalize your prior trade, whether it was a good trade or a bad trade, or somewhere in between, and just look at it fresh. Is this something worth buying? And I look at this right now as like, I don't want to buy this. I would want to buy it maybe 2 or 3 weeks from now, depending on how it plays out.
yeah. So yeah, you know what? I did look, and that was where we
Wow.
were buying it. We were holding through here, and again, it was skirting right there at its 21-day moving average line. I think we probably were a little nervous on this day, but held it and were rewarded there. But then, yeah, we brought it to a full position on this breakout here, and then got rid of the whole thing. So again, just making sure that we're not taking big losses. So this ended up being like a 1% loss on the trade, going from that average cost from, these two buys that we did. So,
And
well,
frankly, I would do that same trade the same way over again. And sometimes you look at trades, you're like, man, what was I thinking? I shouldn't have done that. And then you look at other ones, just go, it's just the way it works, and that's how that one is. That's a category.
yeah. Well, that wraps it up for us this week. Any final thoughts there, Mike?
You know what? I just hope everyone has a very safe 4th of July. Always remember why we have these holidays. Put deep thought into that and what you can do, to make your country stronger and be a, a good citizen, and help others out. And that's about it, man.
Yeah, very good. Well, thank you so much, everyone, for joining us this month. We will see you back here next month. I think, again, we're just going to have to look at the vacation days and everything like that and
I really
determine.
wanted it to be the second Tuesday, just because I like the STSTU.
I
And
know. I
I'm weird like that, but we had to change it just because it is what it
sometimes
is.
that's what happens.
Yeah.
And yeah, so hope you all enjoyed this. And again, if you are ever interested in finding out what we're doing day to day, please join us on the SwingTrader product. You can get to that at investors.com and just click on that SwingTrader tab. We'll see y'all next month. Have a great 4th, everybody, and a safe holiday. Take care.